She'll give us a presentation on gold sparkles amidst the rubble. Lee Choo, the stage is yours.
Okay, thanks, Kevin. A very good evening to all of you. For those of you, I think it's been a while since I've given a or done a webinar, but it's okay. I think after a couple of months rest, I think it's good to be back. Although markets have been quite rough over the past couple of months. So as you know, I'm sure many of you here are following the Ukraine and Russia tension, and that is why today we have crafted this very interesting topic for today, which is gold sparkles amidst the rubble. Okay, something that is catchy, right, to capture your attention. So first thing first, before I start, definitely disclaimer first, because I don't want to keep it to the last. So as you know, all our presentation, this presentation is actually prepared by Affin Hwang Asset Management, and none of the content of this presentation is a buy and sell recommendation. So any of you who are interested in gold, in gold ETF or in any gold product that I mentioned, please go through and read the prospectus before deciding to invest. Okay, so if you are interested in the ETF that I'm going to talk about later, you can head to our website www.tradeplus.com.my to obtain a copy of the prospectus, and please read through and make an informed decision before you invest in it. Okay, now let's dive in. So the first section of today's webinar, we will cover why is gold still the benchmark for capital preservation. Now, I think with the current Ukraine-Russia tension that's happening right now, right, I think it would be interesting to ask, what would you do when things actually become uncertain, right? So we've laid out three options, of which generally most of us would do or would react in this kind of uncertain markets, right? First thing first, I think a lot of people may want to sell down their holdings in any capital market products and hold a bit more cash. Just like, you know, how we saw the Russians who actually withdrew a total of 1.3 billion from their banks. But what happens, you know, so what if they hold cash? The ruble actually tanked 3 days later. But of course, you know, as a result of the tension, the central bank has to actually quickly increase their interest rate. I think it was up to 10 or 20%, I can't remember. And then I think we also heard news saying that, you know, the Russians then started queuing outside the bank, trying to deposit money back into the bank because the bank was giving a little bit of a higher interest rate. But I think if we were, you know, to be in their shoes, I think it's not really a good position to be in, right? Now, the second thing that you want to probably do, or you might probably do, would be to buy equities, because, you know, the market have clearly tanked quite a fair bit. And then, you know, some of us who are optimists will definitely take opportunity to buy at a huge discount, right? But the question is always, do you actually have the holding power? Because we do not know how long the downturn of the market will be. So the question is always, number one, do you have the holding power? And number two, do you actually have enough cash to actually top up more into your equities exposure? Now, the third option, some would agree and some would disagree, would be the fact that people would actually increase their exposure to gold. Now, why is it gold? I mean, if you think about it, if you are the Russians, of course, some will say, you know, I'd rather hold some Bitcoin, right? I don't want to hold the ruble. I want to hold Bitcoin. I want to hold gold because I want to get out of the country. But of course, you know, between Bitcoin and between gold, there is always this debate. So today, the focus is not on Bitcoin, but of course, that can also be a topic for another day. Okay. Now, so have you actually noticed how markets have performed since the war has actually erupted, right? So if you can take a look at what happened, it is quite clear that the gold prices, I think as at the end of January, has been holding up. It has given a positive return of 7.7% up to 24th of March. And then the global markets or global equity markets have actually underperform. And as you can see from the chart, during uncertain times in the market, gold clearly moves in the opposite direction of the equity markets. So if you can see the chart here, actually the performance of gold is actually a mirror image of the equities market, right? Now, let's make things a little bit more interesting, because a lot of people nowadays, right, actually say that Bitcoin is the new digital gold. I don't know if you agree to it. I agree to a certain extent and disagree to a certain extent, because if you take a look at the performance of Bitcoin versus gold, even, you know, in uncertain markets, gold is the opposite, or rather the inverse of the equities market. But we can't say the same for Bitcoin, because Bitcoin generally is a lot more volatile, and it is a lot more, although it can give you a higher performance, but the uncertainty is there. Because if you can take a look at the chart, I mean the line chart of the Bloomberg Bitcoin index, you can see that, you know, the chart is a little bit of a yo-yo, and not just a yo-yo. You can't really tell whether is it inversely correlated with the equity index, or is it, you know, correlated to the equity index. So that, to me, is the concern of Bitcoin. If, let's say, we want to talk about generating or giving you a safe haven asset, right, during uncertain times. Now, gold, other than being used for war, of course, it is also generally used as your protection. Some people may think of it as an insurance, right? Because as you can see, when during uncertain markets, gold perform inversely with the equities market. So it is can be said as a hedge or as an insurance to your portfolio. Now, here are some of the functions which we have identified, or rather generally it is accepted of the usage of gold. First of all is diversification. Why do we hold gold? Not just so that we can, you know, run away from war. It also can actually gives us diversification. So it gives you quite a good hedge during times of uncertain markets. Now, the second point is, of course, liquidity. So given how liquid gold is, it is very easy to trade in and out, because gold is equivalent to cash, right? Whether you hold physical gold, or whether you hold, gold ETF or gold bullions, they are all quite liquid, right? The other thing, of course, is also the scarcity of gold. Do you actually know that all the gold in the world will actually fit into 3 Olympic-sized swimming pools? So this actually shows that gold is actually very scarce. We know that gold is limited. Of course, some people will actually argue and say that Bitcoin is also limited, right? But gold has got a very, very long history in that sense. And we all saw, I think a couple of days ago or last week, people were queuing outside Pavilion wanting to buy the, I don't know what, Swatch Omega watch, is it? And, just because they thought it was limited edition. So if you want to buy something that's limited edition, maybe you should consider buying some gold instead, right? Because gold is limited in that sense. Now, so when is the best time to add exposure to gold? I think this is really the million-dollar question, because all of us will ask, right, the fund manager. Just for the record, I'm not a fund manager, and that's why I will not give any market view, and I do not manage any funds, okay? So when is the best time to add exposure to gold? The question to me, I always answer is now lah. When is the best time to buy? It's always now, okay? It's not, or maybe it should have been yesterday lah, but yesterday already over, already passed already, so cannot do anything about it. So when is the real next best time to buy anything? It will be now, right? So let's take a look at how how gold price is actually being valued or being affected by a couple of things. First of all, we know that gold price react to monetary policy. Second thing, it reacts to market risk. The higher market risk is, the higher the uncertainty is in the market, it is better for gold. And then the other thing is on emerging market growth, market access, as well as the central bank demand. Why? Because we all know that all the central banks in the world do hold physical gold as their reserves. So as for the for some of you who do not know, countries like the US and Germany, they actually hold more than 70% of their reserves in physical gold. Okay, and one thing recently I read was that one interesting thing about gold is that because central banks actually keep or store a lot of gold, right, in their reserve. And a very funny thing is that if you take a look at Greece, even though they were nearing bankruptcy, but you will never hear of them selling down their gold bars in their reserves as a means to improve things, right? Or as a means to pay back, some of the loans that they owe, right? So this is something interesting, and that I believe is also one of the reasons as to why gold would hold, a certain value when it comes to its price movement. Now, if you're still not convinced, you can take a look at some of the various countries where just now I mentioned as a percentage of the reserves. US and Germany actually hold about 66.3%, close to 70%. Most of them hold close to 70% of their foreign reserves in physical gold. Okay. Now, the other thing would be China. A lot of us, because China doesn't report things as transparent or as quick as the other countries. Therefore, nobody actually knows how much gold China actually holds. But I believe China would probably hold a significant amount in physical gold. Now, gold is also not a short-term thing. It's not a fad. It's actually long-term. So if you take a look at the pension funds, what has happened is that the pension funds globally have actually increased their gold weighting from 7% in 1998 to 26% in 2020. Now, of course, this pension fund may not represent our EPF, may not be our EPF, but pension funds globally, generally across the different countries, they do have an increased exposure in their gold weighting. And that definitely would support gold prices, right? And other than that, with rising risk of investing into bonds, countries like the Dutch pension fund have actually reduced their bond exposure by 10%, and in fact have actually channeled 5% of that exposure into gold in May 2021. Other than that, of course, gold ETF plays a big part in supporting the gold prices because it goes mainstream. It is easy to trade. It is easy to gain exposure. Demand has actually increased at 10% per annum if we measure that from 2002 to 2021. And globally, we also saw that the inflows for two gold ETF, especially in February and March, as the economic tensions brewed, has increased from at 2 billion in February and also 3 billion in March. Now, other than that, central banks, like I said, is also a very, very key driver of the prices of gold. Central banks have actually have a steady net increase in their demand since 2010, especially leading by the emerging markets. Okay, so as you can see, what happens in the past in 1995 all the way to 2009, central banks are actually selling gold in their foreign reserves. And as you can see from 2010 onwards, you actually see that the globally central banks are actually increasing their exposure by buying more physical gold into their reserves. Now, of course, the question still prevails whether should you buy, because if you take a look at gold, right, like I said earlier, gold clearly is a protection for you. So it's just like you buying insurance, right? Today, something has already happened, right? The war has already erupted. But if you want to hedge yourself, you always don't react after, right? You should always react before. So even though that, the Ukraine and Russia tensions has already happened, but there are still a lot of uncertainties in the market, which you may potentially want to try and increase some exposure into gold as a way of protection. Because when do we buy insurance, right? We don't buy when you already get into an accident or when your house is already on fire, because you know it will be too late. So it's best that you buy things before it happens, right? So of course you can then play around with your exposure. It could be 5% that you want to buy when things are looking rosy, when things are very certain that it's a equity bull market. And when things are a little bit more uncertain, perhaps you should dial down on your equity exposure and then move them to gold as protection. So what happens to your portfolio when you actually hold some exposure in gold? So I want to counter some myths here. So first thing first, I think a lot of people say, you know, gold performance is so slow, and or gold's performance is actually subpar, right? So, but if you actually measure the long-term performance of gold from 1971 all the way to 2021, gold's performance, the average return is actually at, I think about 11%. So I don't think it is low, because if you compare it with US equities is at 12%. Okay, so gold, other than being a source of hedge, whether for uncertain markets or whether for inflation, it can actually be used as a source of returns other than the equities market. And if we break it down into the Asia Pacific region, we also saw that gold's performance versus the various Asia Pac region, like countries like ASEAN, your Philippines, your emerging markets, Vietnam, Malaysia, Thailand, Singapore, Jakarta, Indonesia, etc. You still see that gold is a source of return. Now, if we are going into inflationary environment, what happens, right? So this is a very interesting chart that I wanted to show because a lot of us tend to think that, you know, gold is a hedge to inflation, right? So, but the interesting thing is when generally, right, when we are in a low inflation environment or when we are in a high inflation environment, actually gold does give you a positive return. So the interesting thing here is that if you take a look at when the markets are, or generally when we are in a low and inflation environment, gold also delivers about 10% average return. And in a high inflation environment, gold actually performs not bad as well, right? Depending on which currency you measure, because this is gold in the various currencies. So if you take a look at gold, especially ringgit per ounce, you will notice that whether in low or high inflation rate, the average return is actually close to 10% or slightly above 10%. So this means that actually gold, right, you don't necessarily need to hold it, you know, as a hedge when inflation goes up, because whether it's low inflation, high inflation, you know, gold still has a part to play. Now, if we are going into inflationary environment, and if you take a look at the US dollar returns, because generally the argument is whenever interest rate is going up, okay, because we are actually in the midst of an environment where interest rates are potentially going up. So what exactly will happen is that between gold and, you know, putting your money into deposits, when interest rate goes up, you would rather put your money into deposits because it gives you a higher return, right? Whereas gold, on the other hand, doesn't give you any dividend. So generally, the mindset is whenever interest rates goes up, gold price tend to underperform, right? So, however, you know, if we look at history, historical returns of gold versus interest rate hikes, it'll be interesting to note that 6 months after, you know, the interest rate hikes, you see that gold starts to perform. Okay, so this is another interesting point where some gold optimists will can actually use to say that, you know, even though interest rate hike is around the corner, but it doesn't mean that gold will continue to underperform, because history tells us that gold can actually outperform even in the in a rate hike environment. So what exactly is your exposure into gold? And the question that you may want to ask me is, how much should I then increase your exposure, put in your exposure in gold? So typically, the advice is, it really depends, because it really depends on your investment style or your risk appetite. Generally, people will say allocate 5 to 10% of your total portfolio into gold. But then again, it really depends, because it depends on the market environment, whether you believe that the uncertainty in the market will prolong, or are you an optimist? You think that there's no point wasting my time hedging my portfolio. I just need to, all into the equities market, because equities market will generally give you a higher return. But if you want to take a more balanced and diversified approach, then I guess having exposure into gold would definitely make sense, right? And of course, your risk tolerance, because if you're a super high risk, super aggressive client, investors, you will probably not consider gold, because unless it is for speculative reasons, you think that during this time you want to allocate more to gold. But otherwise, I would figure that if you are superbly aggressive, you probably would not want to touch gold. And the third factor, of course, it depends on your investment horizon. Generally, for me, but people like me, if I'm trying to save for my retirement, I would definitely have some exposure into gold, because we don't know when things will go wrong. All right. So let's talk about the options that you have today on in Malaysia. All of the options that I give you is actually available on FSMOne or through iFast. So first thing first is, I want to give a shout out to our Bursa listed exchange traded fund, the Trade Plus Sharia Gold Tracker. This one has a code of 0828EA, and the minimum investment is 100 units. So basically, it's based on your standard board lot. And as you can see, the last close as of 28th of March is at $2.57. And this particular ETF is passive. It tracks gold prices. Okay. Now, some of you may also think that, hey, there is the Trade Plus Sharia Gold Tracker in Malaysia is actually of a lower AUM, and it may not be as widely traded as compared to the largest gold ETF in the world, which is the SPDR gold shares. But if I were to compare the performance of these two ETF, you will notice that the performance is actually comparable. So if you want to invest into gold using ringgit, there is no need for you to actually convert or even trade the US market, because number one, I believe your brokerage fee for trading a US market will be expensive. The other thing would be your conversion. When you convert your foreign currency, your ringgit to US dollar, you will be charged a foreign currency spread as well. And those two could potentially negate some of the returns that you will get from the SPDR gold shares. So actually, if you ask me, there is really not much difference between investing into the gold ETF listed on Bursa Malaysia versus the SPY or the Spider Gold Shares ETF. Now, other than that, for those of you who do not have a CDS account and doesn't want to trade the ETF market, we also have the Affin Hwang Sharia Gold Tracker. Okay, I need to check whether this fund is available on Fund Supermart's platform or not. I'm not too sure, but we do have this option. If you don't want to invest into the ETF, you can actually invest into the unit trust version of it. It is actually just a feeder fund that feeds into the ETF. Okay, and the minimum investment amount for this is at 1,000 ringgit. We have just launched this, and the price of this unit trust fund is at 51 cents. So what is the difference between buying the ETF versus the unit trust fund? So first of all, if you invest into the ETF, you can actually trade intraday. if you think that today gold price is going to swing, you know, in a big way, you can actually trade it intraday, meaning you can buy in the morning and then by the evening, if let's say the price has appreciated and you want to take profit, you can actually do that. And also because it trades from according to Bursa's hours, so it the price will fluctuate from 9 a.m. all the way to 5 p.m. when the market closes. Well, as opposed to buying the unit trust funds, as you know, all unit trust funds are calculated based on forward pricing, and the price or the NAV is only available once a day. So which means that if you buy into the unit trust version of this fund of gold, of our gold tracker, you won't be able to control the price and you won't be able to do intraday trading. Okay. Okay. So a very short and sweet presentation so that we can spend a little bit more time on Q&A. So here's where you can actually, here's where you can find us. We are online. We have a Facebook page where you can follow to get more information. You can also follow us on our Telegram, and we also have an Instagram page. Other than that, we have tons and tons of information where you can, read. Prospectus is available. The fund fact sheets are also available on our website, tradeplus.com.my. Okay. Okay. Maybe I can share a. Yeah. So that's all for today. So maybe we can take some questions.
Hi, thanks Lee Choo for the insightful presentation. And I believe that it's helped a lot of investors that have some interest on gold but don't know how to invest on it. Okay, so let's move to the first question. Okay, so he or she is asking, okay, so gold does not pay any dividends or interest. So the gain is only through a capital appreciation. For small investors, storage cost is quite abundant for them to hold a physical gold coin or bullions. So can you recommend an ideal vehicle for small investors who wish to hold gold but not attracted to pay the storage cost?
Yep. I think this is a very good question because when we were constructing the gold ETF, I think one of the things that we thought of is that number one, if you were to buy small exposure or small gold bullion, right, of let's say 1 gram, right? If it's 1 gram, the premium that you pay is actually quite high. So the buy and sell price, the spread, right, is actually wide. Right, that is one option where you can actually buy gold as a retail investor, right? Other than that, I think we in the past we do have a presentation deck that shows the spread. I think if you are buying like 1 gram bullion or those gold coins, the spread can be as wide as 23%. So which means that it's not worth it to buy gold. I think if I don't know why people buy those small gold coins, to be honest, because I don't see that as an investment purpose, unless you're thinking of wanting to run away from the country. For example, if you're in Russia today or if you're in Ukraine, you want to run away from the country, you want to get out of the country, and your currency is just has just devalued. And perhaps in order to get out of the country illegally would be to actually pay using those gold coins that you have, right? Because gold is actually a international currency. Now that is one way. The second way is that we have also that we talk about is also through the banks. So for example, Maybank, Public Bank, most banks in Malaysia do have the gold investment account. Now, those gold investment accounts are actually quite, a good option to invest into gold, but their spreads are also a little bit wider. Maybank, I think, charges about 4%. The lowest that we have seen is probably UOB Bank, and they charge about 2% spread on the gold account. Now, the third option, like I shared just now, would be the ETF and also the unit trust fund format. So if you buy through that, you just pay management fees and your brokerage fee. So if you and the fund itself will take care of the custodian fees. It will take care of the insurance cost as well. Because if you buy physical gold, right, I don't know where you're going to keep. Kelvin, are you going to keep it under your pillow or under your bed?
Maybe a dad will.
But what if, when you go to work and then there's a break-in into your house, right? So you also need to buy insurance for it. So if you buy into the gold ETF, the all-in cost, I think the total expense ratio for the gold ETF is probably standing at about 0.6 to 0.7% per annum. Of course, those costs are in a way not really, you don't really see it because it's all reflected in the fund performance, just like how any unit trust funds would work. So that will be, an option for you to consider if you want to invest into gold. I would say, don't go and buy those bullions unless you're buying like 1 kg bars. Then maybe the premium, the spread is a bit better lah. But 1 kg bars is not going to be cheap. Yeah.
Okay, so thanks for clarification. And the other question is, some people may ask, is better to hold gold ETF or the physical gold, as you mentioned just now, like a gold bar or those gold coin, or is it better to invest in those gold account, like you mentioned, in those banks? So from point of view, which one is better?
Yeah, I think it depends on your purpose, right, of investing into gold. So are you investing into gold because you want to hedge against inflation? You want to, basically diversify your portfolio? Or do you want to invest in gold because you are afraid that you will end up, being in a war situation? Of course, if you are in a war, definitely holding physical gold is better than holding ETF, right? Because if, let's say, the country is in trouble, is in war, probably, Bursa Malaysia will have to shut down. You probably cannot liquidate fast enough. So I would say it really depends on your purpose and your objective. Like I said, if it's for investment purpose, I do not recommend holding those physical golds because it just doesn't, the spread doesn't make sense lah. And you will have to store it and stuff like that. But it will come in handy if you need to run away lah, right, from the country or escape. So I would say that investing via the gold account or the ETF would be a better option. But to me, it's convenient to trade the ETF. So for me, I would personally trade the ETF lah, because for the gold account, even though say places like Maybank, you can buy through their online account, but the prices don't fluctuate all the time, right? Whereas if you buy the ETF, the price is reflected based on the current gold spot price.
Okay, thanks. For the next question, for the Affin Hwang Sharia Gold Tracker and Trade Plus Sharia Gold Tracker, does this fund invest in physical gold or gold mining companies?
Okay, the Trade Plus Sharia Gold Tracker invests at a minimum of 90% in physical gold bars. Okay, so we don't invest into gold mining companies. At all times, it will maintain at least 90%, but most of the time it is at 98 to 99% invested into physical gold bars. So we buy kilo bars. Each bars are 1 kg. And they are all LBMA approved from LBMA approved refineries. LBMA stands for London Bullion Market Association. So as we all know, this LBMA association actually governs the gold standards lah. So we only buy from LBMA approved refineries, and the gold bars are actually stored in a vault in Singapore. And the beauty of this ETF, right, is also that we actually can redeem physical gold bars, but you need to hold 500,000 units of the gold ETF before you can request for redemption. And if you want to redeem, you also have to buy your own ticket or drive down to Singapore to the vault to actually collect those physical gold bars.
This time we talk about those funds and those ETF. As you mentioned, these funds they are not paying those dividends. So can I ask, if let's say if you buy this kind of fund, is dividend paid in this kind of fund?
It doesn't pay any dividend because gold does not, it doesn't generate any income. So it's really just price appreciation.
Okay. For the next question, for investment diversification, what is the difference between invest in gold ETF versus gold miners ETF?
Okay. The interesting thing about gold mining companies, right, or even gold related companies, I think last year or the year before, it was very interesting. Interesting times because gold prices went up, right? And then we saw Pokong's prices even shot up even more than gold, right? So generally, if you are very, very bullish on gold prices, if you think that gold price is actually on a bull trend, and you want to get more returns from this trend, then it make more sense to buy into gold mining stocks or companies because generally it will increase more. But if you are not convinced that gold price is in a bullish trend, then I would suggest that you stay away from gold mining companies. So the main difference is definitely, gold mining companies could potentially pay you dividend because they mine gold, and then it is a company, right? And they do generate returns. So it is dividend paying. So gold is not. So I would say really depends on your usage of it, your back to your objective. Are you just using gold as a hedge? Then if it's as a hedge, then you will use you will invest into gold directly. Or if you are you want to capture the trend of a bull gold market, then maybe it makes sense to hold gold mining stocks. So volatility wise, gold mining companies are also higher.
Thanks for clarification. Let's move to the next question. What is the strategy to purchase a gold? Is it a buy and hold concept? Is yes, how long do the investor need to hold?
I think this one really depends on your investment horizon, right? If you are say savings for your retirement, I would say then do dollar cost averaging. Just average in, no need to time the market, right? Just set a fixed percentage of exposure you want to to gold, and then just do regular savings right? You can do monthly, you can do quarterly, or even yearly, right? Otherwise, if you are more speculative, then of course you have to time the market, right? You have to read charts, you have to look at the macroeconomic condition. Generally, you would want to increase exposure to gold when markets are uncertain, right? Because if markets are uncertain, the chances are gold will do better than the other asset classes.
Thank you. Okay, next question. Is there any minimum amount for small investors to invest in a gold ETF in Ringgit Malaysia?
Yep. So the minimum to invest is 100 units, but I wouldn't suggest you investing in 100 units because if you invest 100 units, you need to pay a minimum brokerage fee of, I think FSM charges 5 ringgit, right? So if let's say the cost to buy 100 units of gold ETF is at 250 ringgit, and you have to pay 5 ringgit, right? Let's say 5, you are actually paying a fee of 2%. So try to be smart about buying the ETF. Try to buy a little bit more. I would think about 1,000 ringgit would probably make more sense based on the brokerage fee that you pay. So you need to work out that amount that you need to pay . So just try to cover make your brokerage costs as low as possible.
Okay. Okay, so next question is, can I just ask from my perspective, recently we see the gold and DXY is for the dollar index is moved quite in line. Do you have any view on that? Because of why?
I don't really monitor the DXY. But generally, if you look at gold, I think gold, because just now there was a chart that we show, right? Performance of the gold price versus the S&P and NASDAQ, right? It has been in an inverse position. Definitely gold, I think over time, it has gone a little bit more volatile, but it's not that volatile as compared to Bitcoin, for example.
Yeah, a lot of people thought that Bitcoin is a digital gold, and I believe that it's quite an interesting topic to talk with.
Yeah, definitely. Because I mean, a lot of people say that Bitcoin and gold has got similarities, right? Things like, for example, both assets do not pay dividend. You just buy and you just expect somebody else to pay you a higher price to take over the assets that you hold, either Bitcoin or gold. Then the third similarity would be both are, both are scarce, right? Because both claims that they have limited supply, right? But of course, there are views where people say that, gold has got usage, right? Gold is used, in vehicle, I don't know what they use to do all these semiconductor, all these things like, right? Your cell phone manufacturing, they are a little bit more commercial usage, whereas Bitcoin is more like, plucked from the thin air, although some may argue that it is currency as well. But it really depends, right? And volatility wise is also different, and it's because it's also still new. Some Bitcoin, optimists will think that Bitcoin generally in the long run, because now it's still new, so it's a lot more volatile, but eventually when it matures, it'll be less volatile, and it'll be like gold. But we don't know, to be very honest. Personally, I don't really have a view as to whether Bitcoin will really replace gold. But from what I see, for as long as the central banks are hogging gold, I don't see gold prices will tank, right? And the other usage of gold would be from jewelry perspective, right? So if it's a jewelry, for the use of jewelry, I think like for us Chinese, right? Whenever we go for weddings, we still give gold stuff, right? Gold necklace, chain, whatever. Those are symbolic. And I don't foresee in the future that people, during wedding, they transfer Bitcoin, I send you 1 Bitcoin for your wedding, that kind of thing. So if, of course, we also can say that, generally the millennials, people who are getting married now, so yeah, you don't give me gold, better don't give me gold. I don't even want it, right? So it really depends, this argument is really is interesting. But for me, I would say, why don't you just hold both, have a bit of Bitcoin and a bit of gold as well.
Okay, talk about the Bitcoin. I saw a quite interesting question in the Q&A. So he asking, will you really use Bitcoin to pay for any purchase you make? And will the seller accept Bitcoin as payment?
Interestingly, not in Malaysia, not yet, because no central banks actually want to really take Bitcoin as a currency or admit Bitcoin to be a currency. There are some regulators in the world where they are opening up, but most of them see it as an investment product, right, rather than as a currency. I think in the US, if I'm not wrong, or some merchants actually do accept Bitcoin for payment. Definitely there is that usage, but we have not seen that in Malaysia. But I think in the US they are. So yeah, we don't know what the future may be, right?
Yeah. Okay. Okay. This question, I'm not sure I'm able to ask you or not. Okay. What is your view in the gold price for the coming 10 years?
10 years. Some people, not me, not I say. not my view. I read somewhere where this gold optimist actually thinks that gold will go up to 10,000. I don't know whether it's possible. I think it's a bit far-fetched, like if you ask me. Unfortunately, I do not have the crystal ball. I wouldn't know where gold price would be. But for me, I really hold I don't hold a lot of gold as well. Probably hold about 3% of gold in my portfolio. And that's probably you know, I'm not going to increase it lah, because I'm also not I think that for the longer term holding equities would be better, but I think gold can give you that cushion lah, you know, that safety net per se, or diversification. Yeah.
Okay, next question. It's thinking about, let's say if someone, they do hold some physical goals, let's say gold accessories like necklace, ring, earrings, all those, and now they want to invest in a virtual way, maybe ETF or maybe gold account. So is there any ways to let them to transfer the gold to virtually?
At the moment, we don't accept this method lah. So basically ETF, right? Because we can redeem in physical gold, theoretically speaking, we should be able to receive physical gold and give you units in exchange. But because there's just too much hassle in trying to authenticate the gold and then to smelt it, etc. And of course, definitely smelting it will come with cost, right? That's why we do not accept physical gold in exchange for the ETF units. So the only way that you can do it is actually really selling the gold bars to the jewelers, or you know, to those bullion dealers, and then buy the ETF immediately. There was one client, I remember a couple years ago, also asked me the same question, because he just bought a physical gold bar, and he bought it at the quite a high price, and he asked me, you know, can I give you that gold bar to exchange for units? Unfortunately, I can't. So you may have to incur some potential losses, because like I said, physical gold bars, the premium is actually quite wide. So buying, you know, your buying price could be at, say, you know, 1,000. When you resell it, it could be, you know, 800 or 900. You would have to, you know, when you convert it into virtual gold, you would definitely have to potentially incur some losses from that premium of the physical gold.
Thanks, Lee Choo. I think due to the time constraint, we have a last question. Okay, the last question is: the gold bar allocated inside a vault?
Yes. So because this ETF is Sharia compliant, so there are a couple of things that we have to comply. First of all is the fact that it has to be allocated. So every physical gold bar that we hold, it belongs to the fund. All right. So it's not like, you know, one gold bar, half of it belongs to another client, you know, like somebody else, and another half of it belongs to the Trade Plus Gold Tracker. So each bar belongs to the fund. So that so in other words, it is actually fully allocated. So for the, you know, for everybody's, you know, as a fun fact, this gold ETF currently holds about 219 kg of gold bars, and we purchase gold bars from Switzerland and also South Africa lah. So those bars are made from those countries. So it's allocated. And then the other thing or the other criteria to make this product a Sharia compliant product is the fact that it is exchangeable with physical gold. That's why we allow physical redemption, in physical gold.
Okay, thanks Lee Choo for today's presentation, and thanks for all visitors for making this event a success. Please look out for more promotion on FSMOne.com, and do visit our Fund Supermart Facebook page, and you can download our FSM mobile apps via Play Store and App Store. Thank you. Stay safe.
Thank you. Bye-bye.